Sharon Wong. She's director of S&P Capital IQ and the key analyst on Esprit at that company. Sharon, thank you very much indeed for joining us. First of all, you had a strong sell. You've moved it to hold. Is that simply because the stock was beaten down so much?
Yes, that's correct. Initially, when the company announced their transformation plan, I downgraded to a strong sell, and we've seen the share price plunging, over the course of the next few weeks. And with the share price having bottomed, I upgraded to a hold in November.
Okay, what is the company doing right, if anything, at the moment? First of all.
Well, I think the company is addressing weaknesses in the business. It is embarking on a major 4-year plan to transform the business and to re-establish its brand as an inspiring fashion brand. I think it is taking the positive steps. It will be refurbishing its stores, addressing the branding requirements, and also coming up with product lines that are more appropriate to its target customer base. But in the meantime, it's going to be a restructuring pain. There'll be a lot of additional costs involved, and that is going to impact earnings over the next 2 years.
Yeah, I mean, management's not really expecting a recovery here till, as you say, 2 years in 2013, if I'm not mistaken.
Yes, well, the next 2 years will be tough. You'll be seeing a lot of additional costs, but the full impact of the restructuring plan will actually only be seen in the financial year 2014-2015. So it's going to be a long way off.
All right, let's talk about what the dangers are here as well, because it's got to re-establish its brand. The brand can, of course, lose its luster in seconds, but it can take years to build it up. Isn't that true?
Yes, that's correct. I mean, yes, there's obviously a lot of execution risks involved, but, I believe that doing something is better than not doing anything. They have recruited a lot of senior management with wide international experience, and they have come up with a credible plan. So now it's down to the execution.
Right, well, we've seen a withdrawal from the US. What do they do about their European operations, given the slowdown there? That's bound to be affecting their business. And we've had a few management changes here, too. Well, all right, they have withdrawn from the U.S. I mean, U.S. has been a tough market for them. Over the past 4 years, they've lost about 1.6 billion Hong Kong dollars. They will be divesting the U.S. operations, but Europe still remains a core business for them. Their strongest market, Germany, they still have a very good position there. They will be focusing on the core markets of Germany, Benelux, and France in Europe. And in China, they will be also expanding aggressively. Right. Esprit, I mean, how does it actually stack up against the competition here? I'm talking about the likes of Henderson, Maritz, Gap, Forever 21, those sort of shops.
Well, I mean, they are competing, and they've done some surveys in Germany, for example. Esprit still ranks as the top brand amongst the women, and even in China, they rank, I think, the third brand. So they are still a very relevant brand, but it's just that over the past few years, they have not been investing enough in their brand and in their stores, and therefore they have lost a bit of relevance with its customers.
Sharon, thank you so much for your time. Sharon Wong there from S&P Capital